Welcome to the Two Beans in a Pod. Since it first popped up back in 2009, Bitcoin has been this name you hear whispered, almost like a magic spell in tech circles, right? It was really pitched as a revolution. Decentralized, immutable, trustless. The idea was it could reshape everything, not just money, but supply chains, identity, so much more. Today we're going to, cut through some of that noise and really unpack where Bitcoin is now. Our mission in this deep dive is pretty clear. Look at the potential, sure, but also the, let's be honest, wild market swings. And critically, shine a light on those hidden risks, the ones people don't talk about enough. We want to make sure you come away truly well-informed, knowing the pros and the cons in simple terms. And yeah, the recent market action, it definitely keeps you on your toes, shows how much belief is still wrapped up in this. Okay, so let's dig in. What exactly was so revolutionary about Bitcoin and blockchain when they first emerged? What was the big idea?
Well, the genius of blockchain, really, was that it offered this extraordinary way to solve a very old problem. How do strangers, people all over the world, agree on something being true without needing a middleman, like a bank or a government? See, traditional systems rely on trusting those institutions. Bitcoin's blockchain, though, it swapped that institutional trust for cryptography. Verifiable math. So data recorded on it was designed to be basically tamper-proof, protected by complex math and this consensus process that made changing the past incredibly difficult, practically impossible. That was the huge shift. Trust through math, not middlemen.
Right, trust through math. And given that core promise, that independence, where is Bitcoin actually sitting today in the market? You mentioned sources highlighting some crazy swings. It feels, less independent, more like a roller coaster sometimes.
Yeah, that's a really good point. The volatility has been quite something lately. Bitcoin got incredibly close to its all-time high, nearly $123,000 per coin, only to then pull back quite a bit. And these swings, they're heavily tied to bigger economic things happening, which, as you said, is kind of interesting for something designed to be decentralized.
Okay, so what is driving these big moves then? Is it really about Bitcoin itself, or is it more external stuff pushing it around?
When you really look closely, a lot of the recent ups and downs come down to, waiting on U.S. economic news. Right now, traders are sort of holding their breath for the latest inflation numbers. That's the Consumer Price Index, the CPI, for July. The expectation is it'll show about a 2.8% rise year on year.
And that matters because?
Because Fed Chair Jerome Powell has basically linked cutting interest rates to inflation easing off. So as long as inflation looks like a problem, the Fed keeps rates higher. And higher rates generally make investors a bit shy about holding riskier things, like Bitcoin. They might prefer safer bets that pay interest.
Gotcha. So it's tied to interest rate expectations.
Exactly. The market is heavily betting, speculating really that the Fed will cut rates in September. If that happens, and maybe we get some clearer signals on global trade too, things could flip pretty fast. You could see a crypto rally potentially pushing Bitcoin back towards that all-time high, maybe even past it. But for now, this sort of cautious mood before the inflation data, it's led to these pullbacks. And there's this fear of getting stuck in that frustrating sideways grind we saw back in July. It just really highlights how much these big external economic forces are steering the ship, despite Bitcoin's design.
That dependence on traditional indicators, it really does feel like it bumps up against that original promise, doesn't it? Being separate from old school finance. Is Bitcoin changing its role, or is this just, growing pains as it gets bigger?
I think it's probably a little both, actually. As Bitcoin gets older and more people use it, it just naturally gets more tangled up with global finance. Its price moves with stocks and commodities, partly because, right now, a lot of people still treat it as a high-risk, high-growth kind of bet. Its future as a totally independent money or store of value, that's still playing out.
Okay, so the market side is one piece. But what about the tech itself? The foundation? A lot of people seem to think blockchain and so Bitcoin is basically bulletproof, can't be hacked. Is that accurate, or is that maybe simplifying things too much?
That idea, the illusion of invincibility, it's actually one of the most dangerous myths out there. It's true that the core cryptography, like Bitcoin's proof of work, that's the heavy computing work securing the network, is incredibly strong. And yes, the Bitcoin network protocol itself, it's never been fundamentally broken since day one. But, and this is a huge but, that security only holds if every single layer of the whole ecosystem is built perfectly and used exactly right.
Every layer. What do you mean by ecosystem?
Well, blockchains aren't just code. They're living things, right? Made up of the code itself, the networks connecting everyone, the nodes validating things, the wallets where you keep your coins, the apps built on top, and maybe most importantly, the humans interacting with it all. A weak link anywhere in that chain. A bug in some code, Someone being careless with their keys, a network issue, or just plain human error that can risk the whole thing.
Okay, so if the main blockchain is solid, where are these weak links usually found? For someone thinking about getting into Bitcoin, what are the real practical risks besides just the price going up and down?
The biggest risks, honestly, often pop up right where people meet the technology. Let's break down a few key ones simply. First, and maybe the most critical, is private key management. Think of your private key like the ultimate master key to your Bitcoin vault. It's not like a password you can just reset if you forget it.
Oh.
Yeah. If you lose that key, or if someone steals it or tricks you into giving it up, your Bitcoin is gone, like poof, forever, irreversible. A lot of the big crypto thefts you read about, they didn't break the blockchain code, they stole the keys. Phishing scams, malware on your computer, tricking people, that's how it usually happens. Remember Mt. Gox back in 2014? Huge Bitcoin exchange collapse. Hundreds of thousands of Bitcoins just vanished. Why? Mostly terrible key management and awful security practices. It really drove home that core crypto rule. If you hold your own keys, you are your own bank, which sounds great.
But also terrifying if you mess up.
Exactly. It puts all the responsibility on you. Then there's social engineering, basically tricking people. Attackers often find it way easier to shack people than to hack code. They play on psychology, right? Fear of missing out, greed, urgency. They send fake emails that look real, build fake websites, promise crazy returns. New users are prime targets because all the jargon is confusing, makes them vulnerable to promises of easy money or warnings that they need to act now to protect their funds. It's all about exploiting trust and fear. And a third big one, though much harder on a massive network like Bitcoin, is a consensus attack, the famous 51% attack.
Right, I've heard of that.
Bitcoin security relies on no single person or group controlling more than half the network's computing power, the hash rate. If someone did manage to get control of 51% or more, they could theoretically mess with recent transactions. They would spend their own coins twice, or maybe stop other people's transactions from going through. Now, for Bitcoin, doing that would be incredibly astronomically expensive and difficult.
But not impossible, technically.
Technically not impossible, especially if power became very concentrated somehow. And it has happened to smaller cryptocurrencies, causing millions in losses. It's a theoretical risk that keeps people vigilant about decentralization.
So it sounds like the core tech is strong, but the minute humans touch it, or power gets too centralized, that's where the cracks appear.
Yeah.
It's like this trustless system still needs a massive amount of user caution and maybe a new kind of self-reliance. Is that a fair way to put it?
That's exactly it, a perfect summary of the paradox. And building on that, you also have things like Sybil attacks, where someone creates tons of fake identities to gain influence, and just general regulatory weaknesses. You know, lack of clear rules in some places lets shady projects pop up and scam people. The human factor, how we use it and how others exploit it, that's often the weakest link.
Okay, this is super important stuff. Before we dive into how you can actually protect yourself, just a quick note. If you're finding this deep dive helpful, please do take a second to hit that like button and subscribe to Two Beans in a Pod. It really does help us keep digging into these complex topics for you. All right, so given all these risks, lost keys, scams, these 51% attacks, what can actually be done? Is there a truly safe way to get involved with Bitcoin or blockchain? Or is it just fundamentally too risky for the average person?
Well, tackling these vulnerabilities really needs a multi-pronged approach. It's not just one silver bullet. You need strong tech solutions, smart economic reasons for people to keep the network healthy, and maybe most vital, way more user awareness and education. Let's talk practical steps you can take. For secure private key management, using the right tools is key. Hardware wallets are a big one. Physical devices that keep your keys totally offline makes them super hard to steal digitally.
Like a little USB stick thing.
Sort of, yeah. Designed specifically for keys. Then there are multi-signature setups, multi-sig, where you need, say, 2 out of 3 keys to approve a transaction. Adds layers of safety. And then there are custodial services, companies that hold the keys for you. That can be simpler, but, you're trusting a third party again, which has its own risks.
Back to trusting institutions, in a way.
In a way, yes. User education is just non-negotiable. People have to understand what it means to be their own bank, know the risks of sharing info, learn how to spot scams, double-check everything, and fighting social engineering. That needs constant awareness campaigns, the community watching out for each other, and better tools that make the safe way the easy way. Because it's true, one bad click could literally wipe out someone's savings. It's that serious. And finally, promoting decentralization. That's the best defense against those consensus attacks. The more people participating all over the world, the harder and more expensive it becomes for anyone to gain that dangerous majority control.
Okay, so it's a combination of tech, education, and keeping the network spread out. What does that mean for the future then? Is security something that can be solved for blockchain, or is it more like a constant battle?
Oh, it's definitely an ongoing journey, very much so. This tech is still pretty young, relatively speaking, and it's changing incredibly fast. That means new challenges, new threats, they're going to keep popping up. The people building the stuff, the communities around it, they have to constantly be thinking ahead, trying to anticipate the next angle of attack. And the stakes are just getting higher, you see. As blockchain starts moving into really critical areas, mainstream finance, supply chains, healthcare, maybe even voting systems eventually.
Yeah, the impact of a failure gets much bigger.
Exactly. Vulnerabilities wouldn't just mean lost crypto. They could destabilize economies, compromise millions of people's privacy, shake trust in systems we rely on. So, achieving that vision of a secure, decentralized future, it needs amazing tech, yes, but it also needs, frankly, some humility. A recognition that no system is perfect, and that our best defense is just constant, ongoing vigilance.
That's a really powerful way to frame it. It really underscores that balance, doesn't it? Between Bitcoin's incredible potential and the absolute need to understand these deep-seated risks. Being informed isn't just about tracking the price, it's about getting your head around this complex security picture. So, as you, our listener, think about digital assets and what they might mean for the future, maybe consider this. How much of your financial safety are you really willing to hand over to code alone, and how much depends on your own personal vigilance? If you found this deep dive valuable, please, one last time, don't forget to hit that like button and subscribe to Two Beans in a Pod. It lets us know you appreciate these explorations. Thank you for listening to Two Beans in a Pod.